Hi, Tom Isaac here. So we're going to continue on, and this is the next video on our tax returns. So we've gone through and we talked a little bit about how to manage our files in the first video. Then we talked about how to manage Schedule 1, those adjustments to income. And then we did this next part here on the first part of Tax Form 1040. Remember, Tax Form 1040 is our major tax form. And we took that all the way down to line 11 to our adjusted gross income, or what people commonly refer to as AGI. So now we've got our AGI managed. We're going to go ahead and we're going to go and do Schedule A. So as we said in the last video, we need to figure out which is bigger, my itemized deduction or the standard deduction. So we're going to go to Schedule A. Schedule A looks like this. It's nice, it's short, it's only one side of one page, but you do need to do this. Again, put your name in here, social security number, please don't put that in. And we're going to run right down top to bottom, and I'll show you how to do this. So it starts out, medical and dental expenses. If I have a question about what's included in here, notice that it says see instructions. I can go and see the instructions for Schedule A. That's one of the files that you downloaded. Again, this gives you great detail on every little bit. So what qualifies as a medical expense? Generally speaking, for our purposes in this course, we're going to consider the potentially deductible medical expenses as being what comes from worksheet number 12. You will not receive anything from employers or doctors or anything like that that's going to have any of this information. You have to keep receipts if you're going to be able to take a deduction for your medical expenses. But for our purposes for this assignment, you're going to go back to worksheet number 12, down to part 4, and look at your estimated out-of-pocket healthcare costs for year 1. So in this case, I put in some numbers and I have $400 plus $100, totaling $500 of medical expenses that I had to pay that weren't paid by an insurance company, and we'll assume that those qualify as qualified medical expenses. So the reason that there's nothing in the tax statements is nobody's going to give you a tax statement on this. This is going to be something you have to keep track of yourself. So that means I'm going to come over here to my Schedule A form, and I'm going to say that I have $500 of qualifying medical expenses. Great. Can I deduct that? Not exactly. Only if it represents a significant part of my income. So this is what's called a needs test. So I have to actually go through and it says enter the amount from Form 1040 line 11. That's why we went and did the line 11 on the 1040. So line 11, 48,353.80, and I'm going to put that into Schedule A. I'm going to come over here, 48,353.80. That was my adjusted gross income. And so what this is basically saying is if your medical expenses are a significant portion of your income, then we'll let you deduct it. If it's not, we won't. And so what's a significant portion? A significant portion is this percentage right here, 7.5%. So I take my income, 48,353.80, and I multiply that by 7.5% or 0.075. And when I do that, I get $3,626.54. So then it says subtract line 3 from line 1. If line 3 is more than line 1, enter 0. So what that says is my medical expenses failed the needs test. It didn't represent a significant part of my income, so I'm not able to deduct it. You can imagine that if I had, say, $5,000 worth of medical expenses, then I would be able to take the amount over that 3626.54 and be able to deduct that. So even if you don't have significant medical expenses or medical expenses at all in worksheet 12, you still have to do this top section on medical and dental expenses. Okay, that takes care of that part. Taxes, state and local taxes. So you'll notice is that we have state and local income taxes. Um, you can deduct those. So where does that come from? Back to my tax statements in form your W-2, it actually has my income taxes that I had withheld for the purposes of from worksheet number 4. So these were the items that I had deducted. I'm going to make note of them and we're going to carry them over into Schedule A. So you can see my federal income taxes in box 2 was $9,000. My state income taxes down here, I had $4,000 of state income taxes and $1,500 in local income taxes. So I'm going to make note of those numbers and I'm going to come back over here to Schedule A and I'm going to put down state and local income taxes in 5A. So that's going to be $5,550 and I can take a deduction for that. And then we have state and local real estate taxes and then state and local personal property taxes. So let's deal with the real estate taxes first. The real estate taxes would have come from our home loan section. So we have uh, property taxes on that residence. Now, you will get a tax statement on this. So if I come down here and I look at this, you're going to notice as well in my mortgage interest statement, so Form 1098, not only has my mortgage interest, but it also has property taxes paid by the lender. So that would be how much was paid by the lender on my behalf for my property taxes. So my property taxes are going to be $1,125. And I can take those and I'm going to put them into my form Schedule A. So I'm going to come down here, real estate taxes, 1125.00. And then there's this part down here, state and local personal property taxes. If you're not in California or Massachusetts, this is going to be very rare. The only time you're really going to see this, and you will not get any statement on this, is going to be here in that home loan section. I did put other property taxes. So it's not uncommon in the state of California and the state of Massachusetts that you may pay a personal property tax on your car. And it's usually only if it's a new car and it would amount to a couple $100. So if you had that and you had that, you would take whatever amounts here. Since that's a rare occurrence, I'm not going to fill anything in there. So coming back to our Schedule A, that means that's going to be 0. Add up all of those lines, and that's going to get me to $6,625.00. Then it says add lines 5A through 5C, and then it says enter the smaller of line 5D or $10,000. So what that means is if this is more than $10,000, I'm limited to $10,000. Now, since it's less than that, that's okay. So we're going to go through and we're going to carry down the $6,625 and 0 cents. But again, the purpose of this limit is it basically says if you have taxes and you paid more than $10,000 in state and local income, property and income tax, or excuse me, state and income taxes and property tax, you can only deduct up to $10,000. This was an addition from the 2017 Trump tax cuts that was designed to punish Pennsylvania, punish New York, Massachusetts, and California because they have very high state income taxes. Other taxes, this would be rare, and then we're just going to go ahead and carry this all down, $6,625.00. Next step, interest that you paid. So home mortgage interest and points. So in the home mortgage interest and points, these are things that you have from worksheet number 9. So the interest that you pay is going to get recorded in here. So the first part that we're going to put in is the interest and points reported on Form 1098. So if you have any questions about that, go to the instructions. But back to our tax statement, here's our 1098, and you can see I have interest here, $33.92 and 78 cents. So $33.92.78. I'm going to write that number down. And then the points, $1,255 and no cents. So this is the interest. That's the amount that I pay in my payment. This was the lender fees up front. So that came from worksheet number 9. I can deduct those things. So I'm going to go back to my Schedule A, and I'm going to put the sum total of those two in there. So the sum total of those two is going to be, let me just add it up here, $46.57 and 78 cents. So that's going to come in here. Now, mortgage interest not reported to you, that's not really going to apply to us. And I'm going to carry all those things down. So when it says to add them up, you have to keep carrying them down. So 46, 57, 78, and then add them all up. Investment interest, we're not going to deal with that at this point. So we're going to ignore that because we don't have any ability for you to be able to take a margin interest. So that's going to be 0, and we'll go ahead and carry that number down. The last thing we have then is gifts to charity. If you have in your worksheet number 5 that you made gifts to charity, by all means feel free to go ahead and put those in here. But don't go putting a big number in here for gifts to charity if you didn't have that in worksheet number 5. So for these purposes, I'm going to put down 0. But again, if you did, go right ahead. For casualty and theft loss, we're going to put down 0. There are no other itemized deductions for you. That's 0. And then we're going to total everything up. So go ahead and get your calculator out. And we're going to add up these. So I've got 0 plus $6,625 and 46.57.78 plus 0 plus 0 plus 0 gets me down to $11,282.78. So that is my itemized deduction. So what do we do with this? What we're going to do with this is carry this over to our 1040, and we're going to go ahead and figure out from there what that means. So let's go ahead and write down that number. We're going to carry that over for us. So again, I'm going to take this and I'm going to save this file. Put this wherever you want to be able to do that. I'm going to skip that for now, but make sure you go ahead and save that file. Back to our 1040. So this was all done to answer this question right here about line 12. Which do I put in? 11,282.78 or 13,850? Because these are deductions from my income, the bigger the number means the less tax I pay. In this case, I'm going to take the standard deduction of $13,850. If my number from Schedule A was larger, I'd put that there. But don't take the itemized deduction if it's